VINCENZO'S Go Crypto Investing, and remember to bell notification, like the channel, subscribe, and share in order to push us through the YouTube algorithm and elusive crypto sphere to help you educate, most importantly, inform uh, yourselves and sidestep and audible the snake oil salesmen and market manipulators that are out there to trap you and fleece, heist, and shist you out of your hard-earned money, right? And if we take a look at the U.S. dollar, the U.S. dollar has been down recently, and if we zoom out to the 3-hour time frame, you're going to see in the U.S. dollar, we're going to isolate out to the 4-hour. Actually, the U.S. dollar is just trades a long time. You can see if we zoom out even farther, where we've been is we know if we take a little look back here, this is where the Fed back here started monetary printing and started devaluing the dollar. Then they started talking the other way right into this box, saying somewhere into the future they were going to start tightening. And then they actually started tightening there. But you can see how we had that rounding bottom as they were starting to talk about maybe tightening. It rallied pretty good off of its low, right down here at about 89. And it rallied back to 96. Couple consolidations, held the moving averages. And then the Fed started to monetary tighten in January of 2022, and you can see the U.S. dollar took off like a bat out of hell. Interest rates rose. 30-year fixed mortgages got to 7%. 10-year treasuries got to 4.5%, and that was a forecast back here. The 10-year treasury. Let's take a peek back real quick if we can find the 10-year treasury. You can see how much it rallied. With Vincenzo's prediction, 10-year government bonds manipulated since 1980 with interest rates. As hyperinflation started to take over, I expect prices to move up here over the next couple of years in a huge move, 6/6/2021. You can see that's 10.5%. And the prediction was made 6/6/2021, right? And that's back when prices were down in 2021, 6/6. We were at about 1.5% in the interest rates, right? And since then, 6/6, here's June 6th, right in there, we went up 174% in interest rates. And you can see so far in this current move, we've gotten up to 4.349%. And if we zoom out to the weekly, you can see what we were talking about when I was saying up there that the prices have been manipulated since 1980. And you can see that, get out of there. You can see that massive manipulation right here in this huge falling channel, right, that this was in. And you can see that beautifully right there, a huge falling channel. And this is when they got manipulated, when we were going into hyperinflation after the Great Society out here in the 70s. We had the central bank and the Fed be created back in there. And then we had a couple of world wars that we had to pay for. Then we had the Great Society movement and massive inflation that culminated in orgasmic peaked right about 1980. And then you can see a classic triple top here, or a head and shoulders topping reversal pattern, as Reagan and Paul Volcker started to fight interest rates, and they started heavily manipulating them. And you can see that head and shoulders here in the monthly time frame. We had your left shoulder, your head, and your right shoulder, and your neckline, right? And then that also the head and the right shoulder started this falling channel as the left shoulder started to lower support for the bottom part of this falling channel that we've been in ever since for over 30 years, right? In a 30-year bear market and government yields, and a 30-year bull market in bonds, right? And that officially came to an end last year as the interest rate started to tank, right? And you can see the head and shoulders topping, and you can see if you did a targeted move from the head to the neckline to where this should have broke down to, and you can see it should have come all the way back down to here, and it indeed did eventually hit that target. But you can see this falling channel that we were in as they kept the market manipulated and forced interest rates down since 1980. You can see upper resistance in 95, upper resistance in 97, 2000, 2007, 2010, 2013, 2018, when we had the repo crisis and they tanked interest rates, running right into the they were already starting to tank interest rates, and then the COVID dump in the COVID lowering of rates, which they needed that COVID crisis here, as you had a big financial crisis about to take over there until COVID came, and they could use that as an excuse to print money, collapse rates, and devalue the dollar briefly. But old Vincenzo was telling you this eventually was going to pump back to the upside because they couldn't control this anymore. And you see we broke back into the channel after we dumped out during the COVID artificially manipulated rates even more to the downside, and now they're responding to the upside. We broke back into the channel here on a consolidation in early January 2021 and had about 6 months of the consolidation along, and then we broke to the upside, broke the moving averages, broke the uptrending resistance that we last hit in 2019, and now we're sitting up here above the 200-day, and that's very bullish for interest rates, very bearish for the dollar, and very bearish for the stock market and equity market and the crypto market. And you can see the crypto market has collapsed, while the gold bullion has done what it should do after it ran into a huge triple top here. And we believe this is a 20-year cup, almost a 20-year cup and handle. As you can see, where we went through this a few times, we had the pump, the handle, the cup, right? You see this? This is the cup right here. Draw that. There's your cup. This was your consolidation with the handle, and then we had a failed breakout there with the triple top, top one, top two, consolidation on the handle, and then we tried to break out, which would have gave us a technical target at $3,200, and we got rejected. But you can see as crypto has been down as much as 80-90% in individual cryptos, but Bitcoin and the big cryptos down 50, 55, 60%. Gold bullion is doing what it should do and is only consolidated from its all-time high at its low, 23%, and currently 14%. So you can see gold bullion has done a very good job, and this was the cup and handle, and this was the handle part of the cup and handle, and this is where you tried to get a breakout and got rejected on a local double top, but a much bigger macro time frame triple top. Then you got supported off your underneath support like you've been, and now you're starting to pump again in the monthly time frame, and you can see you've broken out of that upper resistance, got back above the 200-day moving average, and now as long as you can stay above this descending line, you can make another run up here at $1,900 and attempt to break back out of this multi-year cup and handle, or 20-year cup and handle, right, nearly. And we're going to see over time if that does indeed happen. And now as we move over to the cryptocurrency,